Hello everyone and happy Friday. Before we share my analysis from these last few days, please remember that neither I nor the SIMETRI team from Crypto Briefing are licensed financial advisors. What we provide is not a personalized investment advice. It is merely our opinions based on our various research and diligence. As always, do your own research before making any decisions about buying or selling crypto. I think it's important that we chart the downside because we are moving to the downside today. And the key downside level that I'm watching is really 22.6. I don't see the market having the strength to recover if we moved underneath that level. Probably the next level to look out for would be 20,800. If we fell underneath there, it'd be a very negative sign. The monthly pivot for me is at 24,500. I'd like to see the market close above there on a weekly basis on a continued period of time, and that would be a very good sign. When price starts to get above there, there's definitely more of a bullish bias in the market. The weekly pivot point is 23.5. Obviously, we've just started to slip underneath there, so that's not generally what I wanted to see this week, and I hope we can recover back above there soon. In terms of upside price targets, if we were to get a good recovery, I'd like to see 26.6 tagged, and I'd like to see 27,500 tagged, and then that would be the ideal targets for me, and then the market can either do one or two things, which I'm going to discuss on the charts in a moment. Daily price closes below 22,600. As I mentioned earlier, that's going to be the bearish signal for me. If we start to get underneath there, I don't see a way back, and I would turn bearish at that point. Okay, so let's have a look at Bitcoin on the charts. And one of the things I wanted to discuss today was why I think the market's moving lower and what could be the possible technical reason. We know the fundamental reason that traders are a bit spooked ahead of the FOMC, but what could be the technical reason why Bitcoin is moving lower? And I think I can show you why. So if we have a look at this Fibonacci extension here that I've drawn, so we've drawn here the last significant high, the significant low in the market, and after we've made a new high there, we've pulled back. So we've got our Fibonacci extension targets there, and you can see almost perfectly, actually absolutely perfectly, the market has hit the 1.618 Fibonacci extension target there of 25.2. We've hit that and we pulled back. So I think this sequence here that the market is working in, people have taken profit there because it's gone to the most popular sequence there, and a lot of longs who went long around this area or long on the pullback to 20,000, they've started to book some profits, and they want to see what happens after the FOMC before going long again. Interestingly, if we were to move higher and we were to negate this target and move above 22.4 again, the next target to watch out for, the 2.618, which isn't always the most popular target, comes in at around 26,600, which is basically what I'm looking at. It also comes in line with this trend line that I'm going to show you in a moment. And the next target above there, the 3168, which is also nearly as popular as the 1.618 in terms of price targets. If you want to hold positions, it comes in at just above 27,000. So all the targets that I had originally, and they're highlighted in this Fibonacci extension. So that's interesting, but there is, of course, the chance that we're going to pull lower from here now, which is quite worrying. And especially if we start to see a big round of profit taking and some negative price action after the FOMC. So the next chart that I want to show you as well, which is quite worrying, is this rising wedge pattern, which is obviously bearish, and we started to slip underneath there today. So I don't like that, but there is some hope because the trend is still bullish for me while we trade above the 200 period moving average on the 4-hour time frame, and that comes in about 22.6. So until we're underneath there, there's no death in Bitcoin yet, and there's still some hope. So the other thing I wanted to highlight is that the Bollinger Bands are rising and they're narrowing, so they're really starting to narrow, and that indicates to me that a big price breakout is coming. I mentioned the falling trend line earlier. That would be the upside target if we got above the Bollinger Bands. And if we move underneath here, then we're probably looking at a move back to 20,000. It's probably as simple as that. And again, I want to go back to this key trend line, which is denoting basically the point in which, for me, the market is going to start to turn bullish. And you've also got the 200-week moving average, which very frustratingly, the market has moved back to test today. So while we're above the 200-week moving average, there is, of course, some hope. But if we move back to test this trend line, bear in mind the Fibonacci targets that I told you that coincides with earlier, this would be a natural area for the market to test. And that's why I do have some hope that Bitcoin can head higher, and that it is indeed a trend line that I've been waiting for the market to test. And it coincides quite nicely, by the way, with the weekly mid-Bollinger Band, which Ethereum has recently tested. I'm going to show you that in a moment. And finally, I'm going to highlight on here some technical reasons why there's still some positivity towards Bitcoin. So weekly MACD indicator, two real green candles are buy signals. Additionally, the signal line is crossing over, and of course you've got the MACD 14-day moving average crossover. You've got the RSI crossover as well happening. So these are all bullish signs longer term, and reasons why we shouldn't be getting that nervous about this pullback unless we get some real technical confirmation. There's still some good signs out there why Bitcoin can recover. So overall, hoping for a continuation of the move higher still. I'd be getting worried if we got too much below 22.6, 22.8 would be getting very nervous for me. There's a big fib target that it's already been hit, but there is some other important fib targets higher. So do bear that in mind. There's a rising wedge is also seen on the charts very clearly, and we're breaking underneath that. But I still prefer 26.6 to be hit, and that's still my primary scenario. And basically, I showed you the Fibonacci extension targets today just to try to put some context why the market could be turning lower. Okay, so let's briefly touch on Ethereum. So Ethereum has recently touched its mid-weekly Bollinger Band and had a decline. It very often happens after a protracted downtrend and a bounce from the lower Bollinger Band. You move towards the mid-Bollinger Band, and then if you fail there, you can sometimes move back there or just have a brief period of profit taking before you can start to test it again and move towards the upper or whatever. But that's what happened. We tested towards there, and it's obviously something that the market pays close attention to. Other things that I want to highlight as well, there's this similar trend line to Bitcoin, which is denoting the uptrend. We've also got a key form of breakout area, so that's coming in at around 22.240. It also coincides with the upper daily Bollinger Band there. So there's some interesting stuff happening on there, and that's always been my primary target for Ethereum, 2,200. If you watch my weekly webinars, you'll know that's an area that I've been looking for the market to gravitate towards. There is some nasty price divergence come down to 1,800, so I'm not surprised to see the market going down there, but I don't really want Ethereum to go too much under 1,800. It's normal that the divergence gets reversed before the market starts to move higher again. Overall, we've seen exactly the same thing that I highlighted with Bitcoin in terms of Fibonacci targets. So no big surprise there. So big low in the market, form will swing high, form will swing low, and you've got the 1618, but that was briefly broken, but it was very near around $2,000. So again, the next big target to watch would be 277 or basically 238. So no surprises to see some profit taking there. And the fact that we broke it is actually pretty bullish. It means it wasn't the hard target the market was looking at, probably, unless I've drawn the sequences wrong, but I don't think I have. So there's some hope that we can go towards 22 or 238 or something like that in future if the market heads higher. So overall, Ethereum could be headed back towards the 1,800 level. As we know, there's one big Fibonacci target has been reached and pierced, but I do prefer 224 or 2380. The merge height, it does make Ethereum tricky, but again, we could be seeing yet another dip buying opportunity ahead of the merge. And thank you. I hope you found my thoughts helpful. If you'd like more, please click the subscribe button for Pro BTC Trader and join me every week on Wednesdays for our live trading war room and daily email updates.